People making money through e-commerce platforms will have one less headache to worry about this tax season. The IRS announcing it is giving Americans a one-year reprieve on new tax reporting requirements, a rule requiring platforms to inform the IRS of individuals making more than $600 a year in online business transactions. Joining us now, Nora Yousif, RBC Wealth Management Senior Vice President. Nice to see you. So why, in your estimation, did the IRS make this change? Is there some acknowledgement that maybe this dollar amount is too low? And what does this mean for taxpayers?
You know, I don't expect that amount to change, but it does allow taxpayers to prepare and get a better understanding of the new reporting requirements. And in anticipation, this is really making it so that the IRS can better get a grip over unreported business income.
I'm wondering about the timing here. The Congress just passed a $1.7 trillion spending package. We also, well, this is a day before a holiday. You really can't release news on any less busy day of the year than this, except for maybe right before New Year's. Just wondering if there's anything to read in terms of the timing of this announcement.
You know, I think it's year end, that there was a year end scramble. I'm sure they were getting flooded with questions. And so really, at the grand scheme of things, this doesn't really change income that is truly taxable, just what information the IRS will receive. So I am really telling people that they still need to track and report all income that comes through. When it comes to the IRS, you really don't want to mess around.
All right, let's get into some of your financial advice for 23. And I love this one. Ask for a raise, but do it now. Why?
Yeah, well, unemployment is as low as 3.7%. Demand for workers exceeds the number of unemployed people looking for work. So for now, at least, the employee, not the employer, has the upper hand to demand more pay. And I'd say do this now. Don't wait for the annual review. One, budgeting and forecasting goes on around now for businesses. Plus, you likely have a limited window of time here. This strong labor market is a case where good news is bad news, as the Fed is targeting employment in an effort to lower wage growth, inevitably translating to job loss, which we're already starting to see layoffs extend beyond tech.
All right. Speaking of good news, good news, the year's almost over. Bad news, we're still stuck in our 401ks. Just wondering what people can do. I'm talking about tax loss harvesting. It's still available for another few days. We got the markets open Tuesday, Wednesday, Thursday, Friday next week. Any advice there?
Yeah, well, 2022 wasn't exactly a year of gains. And no matter what's going on in the economy, we're always conditioning ourselves to sniff out the opportunity for clients, whether it's fixed income, locking in higher rates for longer, or discounts in the equity market. On taxes, you want to make sure you are harvesting your losses. So what does that mean? Any losses taken this year, including in crypto, can offset capital gains up to $3,000 in ordinary offset gains and $3,000 in ordinary income on your 2022 tax return. Oh, and if you still have some losses, you can carry those losses over to offset future capital gains in future years. Now, this is important because you want to keep a long picture and have an understanding of recessions. And the good thing about recessions is that they don't really last much longer on average than a year and a half, and they are always followed by booming years in the stock market where you will likely have gains. And of course, past performance is no guarantee of future performance.
All right, sage advice. Got to leave it there. Always appreciate you stopping by. Nora Yousif.
Sure.